The two-day strategic and economic dialogue between the U.S. and China wrapping up in Beijing. We've already seen the Treasury Secretary give a presser at a news conference, and our Aaron Burnett is in Beijing covering his trip. Aaron, good morning to you.
Good morning to you, Carl. And it's been pretty interesting here. I know you heard Treasury Secretary Tim Geithner talk at the press conference. I also put the question directly to him that is really important for global markets right now, and that is there a bubble in China or not, since it's really the cylinder that's powering profits for American companies, since we all know nobody can count on Europe right now. Bottom line, you heard him say it on Squawk as well. I think China's economy looks very strong. He dismisses talk of a bubble. The other big headline coming out of this that matters when it comes to American corporate profitability, of course, is the currency situation. I wanted to hold this headline up for all of you all. The main English language daily here, the China Daily. You can see it here in front of me. Yes, you've got Ben Bernanke on the cover and Tim Geithner. It says, Hu pledges currency reform. And the reason I highlighted this is that China's taking a step in the direction of saying it's going to move its currency by that headline. Usually President Hu does not talk about currency, so it's a pretty rare thing that he did. That being said, China's going to move its currency when it pleases and not when the United States necessarily wants. One key question on that I put to the Treasury Secretary I wanted to tell all of you about, and that's how the coverage is here in China. Chinese press is saying, yes, China will move on its currency if, and this is interesting, if America relaxes export controls on some high-tech goods. And you may say, what are those? Well, it's interesting. We used to export navigation systems to China, some things that even could be used in terms of missile detection and missile placement, lasers, things like that. And there are a lot of export controls saying we're not going to send those to China. They've got the world's biggest army, and America's obviously afraid of China at this point in a lot of ways. So China's saying we'll move the currency if America gets rid of those export controls. I asked the Treasury Secretary about that, and here's what he said.
China wants more of America's technology, in particular things that could, some say, be used for military ends. China has the biggest army in the world. Every article I've seen here in China has said we're going to move on currency, and the U.S. is going to move on letting some of those high-tech military technologies come here to China. And they're sort of setting it up as if it's a quid pro quo. And I'm wondering if that's your perception.
I don't think it is at all. But again, your point underscores the fact that it's good for Americans to remember this. Because, we've been through a very challenging period. But America is exceptionally good at the technologies that are most important to future economic growth, both here in the United States. Now, the President, as you know, initiated a project to take a broad look at how to reform and modernize our existing export control regime that was designed for a different era at a different time. And he's committed to looking ways to adapt those set of constraints, those set of protections for the challenges we face today.
It's an interesting point, and quid pro quo or not, this is really one of the interesting fault lines between the countries. But as all of you know, the truth is when it comes to this whole issue of currency and when it comes to what happens between China and the U.S., China holds a lot of the cards right now. We all know they've got the largest pile of foreign reserves in the world, $2.5 trillion, number one holder of American debt. And I thought you all might find this interesting. This year, China is slated to pass Japan as the world's second biggest economy. Last year, the Chinese economy was about $4.9 trillion compared to Japan's $5.1 trillion. So, sure, all that may sound frightening, but as we all know, of course, the U.S. economy is nearly 3 times that size. So far, so good, Joe. I mean, we're not dying yet. So what about when it comes down the line to us versus them on commodities? You're going to hear much more of that coming up later on from the Treasury Secretary. And also we talked to people on the street about whether there's a real estate bubble here. Pretty fascinating answers, and we have all that coming up. Back to you guys.
There's so much so much going on. It's like drinking out of a fire hydrant over there, Aaron. Thank you for that. Aaron Burnett in Beijing.
All right.
Our senior economics reporter, Steve Leisman, and CNBC contributor John Rutledge. John runs private equity firm Rutledge Capital, a former Reagan economic advisor. Good to have you back on the program, John. Steve.
Good to see you, Carl.
Best laid plans. I mean, you can create these long planned trips to China,
right,
but sometimes the news flow goes against you, and that's sort of what's happening here, right?
I mean, I think what people want to know right now is what's happening in Europe and what role the U.S. may or may not be playing relative to Europe. The most important thing I heard Geithner say was, we believe that Europe has the capacity to deal with these challenges. And you can look at that 2 ways. One is sort of just on the face of what he said. They have the capacity to deal with it. The other way is Geithner talking to Europe the way you might talk to your son or something like that and say, you have the capacity to deal with this. You ought to deal with this. I understand there's a bit of frustration on the part of the United States that Europe has not stepped up to the plate forcefully here. There was a sense that this deal was done 2 weeks ago, and Europe seems to have been dithering once again. And they're frightened, frankly, that this sort of goes along to the United States and contagion. I'll be back at 8 o'clock to talk about how economists are now kind of changing their outlook and their forecasts because of concerns about contagion. It feels like something we shouldn't have to be dealing with.
John, it's not just Europe either. It's North Korea has thrown a huge wrench into some of these policy goals. How is the strategy vis-a-vis China changed given these two big distractions that are going on?
Well, China, of course, is really the only way the U.S. has to talk with North Korea, and North Korea knows that this is a perfectly wonderful time to get a lot of press around the world while Geithner and Clinton are in Beijing. But I think North Korea is really a sideshow. As Steve said, the European story is a very big deal. It's a story about broken markets and liquidity. And it's really more about liquidity than it is about any other thing. It's the $280 billion that Greece has to raise this year.
Hey, John, can I interrupt you real quick because I want to understand this distinction you're making. You see this as a liquidity issue, not a solvency issue?
Well, there's a solvency issue for Greece, of course, Steve,
right, but not Euro-wide.
Yeah, but let's remember, Greece is the size of Louisiana with the population of Los Angeles and the GDP of Ohio. So this is not a world crisis. The crisis is the liquidity of the capital markets because this year Spain has to raise $280 billion just to roll over their debt, another 80 for Greece, 450 for Italy. The problem is the world needs 24/7 capital markets, and we have 7-Eleven. They're open 7 hours a day, 11 days a month, and that's not enough in order to manage these kinds of debt rollovers.
So, John, how much of a danger is any pullback in Chinese growth given the anchor, the albatross that Europe has become for the global economy?
It's a terrible danger. That's why it's so important that our officials not screw this up by going over and playing Macho Man in Beijing. And I have to say, I think actually Geithner did a personal best this time.
Really?
At sounding like he understands a little bit about what's happening inside China. Look, we have to remember, the speeches that Geithner and Clinton make are speeches made for home cooking. They're made for this audience, not for the Chinese audience. And the same is true for the Chinese officials the other way.
John, let me ask you what's made for home cooking over there is pictures playing basketball. Because we know the Chinese love it. That had to go somewhere.
Right? Well, of course. Well, they had a picture of W riding a bicycle when he was there. Last time you and I were there, Carl, too.
John, let me ask you this question here. The idea that the Chinese now, as I understand it, are running a trade deficit with the entire world. What does that tell you about what should happen to the yuan overall? Because here we are over in China telling them they need to depreciate their currency against our currency, and perhaps there's an argument to be made on a bilateral basis. The trouble is the dollar is not a bilateral currency. It's the world's reserve currency. So in your opinion, what are the Chinese, we're going over there saying, depreciate your currency. What are the Chinese thinking about their relative trade situation in the world?
Well, I actually know the Chinese leaders that Geithner's been talking with. Wan Shishan is just a very tough man. But let me tell you, Steve, when you're talking about currencies for that part of the world, convertibility is the issue, not the rate. It's still illegal for most people and businesses in China to own foreign currencies. And so until those rules are opened, which takes time, what the rate is between the countries is really a red herring because there is no open market to own this stuff in the first place. And the second story is what's on their mind. When you sit privately in a room with these officials, what are they worried about? It's not the value of their reserves, it's stability. They only have 3 policy objectives in China: stability, stability, and stability. And they're worried about not only social, political, but economic stability. The very reason they pegged the currency to the dollar in 1995 is because the Fed had such a good reputation, and inflation in China equals change of governments. So they outsourced monetary policy. Now, when you say, what are you worried about? They're worried about the Fed losing that character. 1,200% increase in bank reserves, a huge run-up in the budget deficit, runaway debt, and protectionism. See, the way China is going to solve their reserve overhang is they're going to allow Chinese firms to own foreign assets and go out and do business in the rest of the world, which will actually transfer those reserves to private balance sheets. But that can't happen if the U.S. and other countries block their ability to make those moves internationally.
Right. And that's where, well, we'll see to what degree Congress loses its own mind when it comes to China later on.
A big Chinese company comes in and buys the U.S. company.
Been down that road,
exactly.
Well, Unical, 3Com, we've seen that movie before.
Yeah.
But it's coming. It's coming because they have all those reserves and they've got to put them to work outside of U.S. bonds.
Right. John, good conversation. Good to talk to you again.
Good talking with
you.
you.
John Rutledge, and Steve, of course, is going to be back.